Imagine waking up and realizing your home isn't worth what you owe. Your job is gone, the bank is bankrupt, and the stock market is crashing. This was 2008, when the global economy fell apart unexpectedly. So what happened? Why did Wall Street collapse? How did bad mortgages threaten capitalism? Let's rewind the financial chaos, starting with easy loans that led to global panic. In the early 2000s, interest rates were low. Banks handed out home loans like candy. No credit checks? No job? No problem. This was the rise of subprime mortgages, risky loans given out for profit. Home prices surged, and people thought buying homes was a ticket to wealth. However, this created a bubble, and bubbles burst. Banks didn't keep these risky loans. They sold them as mortgage-backed securities. They packaged unhealthy loans into collateralized debt obligations, falsely labeled with high ratings. Everyone was profiting until borrowers began defaulting. As home prices fell, many couldn't pay their mortgages. Those fancy investments turned into worthless junk. By 2008, major banks began to collapse. Bear Stearns fell first. Then Lehman Brothers declared bankruptcy, shocking the world. Stock markets crashed and banks froze lending. Trust evaporated overnight. Governments stepped in with a $700 billion bailout trying to keep the economy alive. The aftermath was devastating. The global economy faced the worst recession since the Great Depression. Unemployment soared, savings vanished, and neighborhoods foreclosed. Ordinary people suffered while some banks that caused the crisis received bailouts and bonuses. Public outrage grew as movements like Occupy Wall Street rose, highlighting a broken system. Following the crisis, new regulations emerged, such as the Dodd-Frank Act. Banks had to hold more capital, and watchdog organizations were created to protect consumers. Yet many things remained unchanged. Wall Street recovered along with housing, and risky behaviors resurfaced. The 2008 crash taught us hard lessons. Greed spreads quickly, complexity can hide danger, and protecting your financial literacy is essential. When money becomes a gamble, the consequences are massive. But here's the good news. Understanding this history equips you to avoid similar pitfalls. You don't need fortune or luck to become a millionaire. It's about playing the money game strategically. Let's unlock the Millionaire Playbook, where success isn't a secret but a set of rules not typically taught in schools. First, own assets. Millionaires trade money for money, investing in stocks, real estate, and businesses. Those investments work while you sleep. It's about building wealth, not just earning a paycheck. Next, adopt a millionaire mindset. Shift from thinking, I can't afford that, to, how can I invest smartly? Money becomes a tool, not an emotional burden. Savings are important, but invest your savings strategically. Money is a weapon meant to grow, not to sit idle and lose value. Diversify your income streams to safeguard against reliance on one job. Build a financial ecosystem where different income sources support each other. Learn the language of money. Understand interest rates, returns, and tax strategies. Financial literacy is your best defense in the money game. Time is your greatest asset. Invest early for compounded growth. Don't wait for the perfect moment. Start small and stay consistent. Finally, marry purpose with your wealth. Define your goals: freedom, impact, legacy. Money without purpose is often wasted. Remember, becoming a millionaire isn't about luck. It's about being intentional with every financial decision and action. So, take control of your financial story and apply these rules. Your future self will thank you. Start today and play the money game smarter. Subscribe for more insights and strategies.